All right. Yo, 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 yo. Hey, welcome to Fast and Furious Forex here at Forex.Today. We're going to cover gold, oil, Bitcoin, euro dollar, S&P 500, 10-year T-note, viewer's choice. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose.
U.S. consumer confidence preview, tariff concerns, and a slowing job market seen weighing on sentiment. U.S. dollar to yen recovers above 147.50 as markets focus on Trump-Fed feud. Case-Shiller down 0.3%, MOM for June versus 0.2% estimate.
Euro US dollar regains traction near 1.1650. Focus stays on US docket.
United States Housing Price Index, MOM, came in at 0.2% below forecasts, 0% in June.
United States S&P Case-Shiller home price indices year over year registered at 2% below expectations, 2% in June.
Crypto today. Bitcoin Ethereum pullback persists despite rising interest in spot ETFs. Futures pointing to slightly lower open on Wall Street.
United States Red Book Index year over year up to 6.5% in August 22 from previous 5.9%.
Euro, U.S. dollar price forecast. Bulls hesitate amid fresh concerns about Fed's independence.
Durable goods 1.1. Yeah, 1.1. That's X transportation, so you want to take cars out of there. You also might want to take defense out of there because, I don't know, the government might buy an airplane or a bomb for different reasons other than the health of the economy. Headline number, though, quite a bit higher than expected. Let's see. And yeah, not a lot has happened in the past, but when it did happen, we had, so again, 77.8% chance the 2-hour trend is up since the actual is greater than consensus. And this is what we've seen in the past for USD yen. The other things in this situation didn't have a reliable, repeatable pattern. Yeah, good to know. So let's move over to our macro. This is supposed to be fast and furious, so let's go, go, go. There are other YouTube live streamers that'll stream for 4 or 5 or 6 hours. You probably want to watch them, so let me not take up too much of your time. In this case, all we're going to do is take a look at what is actually happening. We're going to look for, in this case, the fundamental situation when we do macro, and then we'll go through pattern recognition on the major assets that you probably trade. So taking a look at the macro situation right now, Treasury yields 4.28. We want this closer to 4.20. Oil went up to our 65 mark and collapsed as it was expected to. And notice that we got quite a negative score on oil. So having it go up and then collapse is, well, that's straightforward. Cool. Gold flat, S&P 500, a little bit down, a little bit on its edge from yesterday's pullback. Well, maybe today is a buy the dip scenario. or maybe not. 98, okay, dollars, flattish. Bitcoin, there's that big move down in Bitcoin and Ethereum. You might want to, try to decide, is it another buy a dip scenario? For that, you'd need a fundamental view for crypto, in particular Bitcoin and Ethereum. But you'd also want to take a look at seasonality for it. Know when, what if it normally falls this time of year? Have you thought about that? Well, think about it. Well, we have all that data in here. Now, looking at the market earlier today, I can tell you it seemed quite benign. Not really excited to do one thing or the other. So my word for you of the day is cautious. But nonetheless, we can do some pattern recognition. So I picked out some of the best assets, or let's say most popular assets, and that's euro dollar, Bitcoin, 10-year T-note, gold, S&P 500. And in this particular case, I am going to look for continuation patterns, or trend patterns, I really should say. And the trend could be up, down, or sideways. Or reversal patterns, things like Gartley's and head and shoulder patterns and all that kind of stuff. Okay, so that's our plan. So what do you think about euro? Just as a reminder of our methodology, we're looking for not only trend and reversal patterns, but we are looking for them on 5 different time frames per asset. Now, we have way more assets. You might say, well, Wayne, I want to trade euro Kiwi. Well, I can do that, but we don't have time for that because this is fast and furious. So what's going on with the euro when it goes to technical pattern recognition? Right now on the 4-hour chart, we have an up channel, and it looks like we want to make our move to the upside, going from 116 to 117. That makes sense, huh? Yeah. What about the other time frames and the other patterns? They don't exist. Not worth your time. Not worth your time because your time is valuable. And TRADARS helps you with your noise to action ratio. Cuts out the noise and gets you focused on what to do right here, right now for the right technical and fundamental reason. So what do you stink about Bitcoin, huh? Well, on the long run, not a lot going on, but maybe, just maybe a potential breakout here. Let me zoom in. Okay. Ooh, if it breaks out, you pull back to the moving average, which it did, maybe an up to 111.5, maybe. But the previous triangle, like for example, the previous pattern here is one of consolidation. So you would have to be quite bullish and probably have been sitting on your hands at 110, waiting to buy it. Well, there's your break, pull back. Maybe you're going to be long and gone. 10-year T-note. Yo, 10-year T-note. What's going on the 10-year? Okay. Price up, yield down. That's what we want. Price up, yield down means Fed is probably going to cut. Well, it doesn't mean that. It means that's how the market's trading. Or that, at least that's one way to explain it. So check this out. We have an uptrend on a 15-minute chart and an ascending triangle on a daily chart. So if I zoom in on the daily, what's happening here? Well, we're climbing. Bullish engulfing candle based on what happened last week. Okay, we've had a nice little dip. Looks like about a 50% Fibonacci retracement. Back to the daily moving average and into the support pivot. And so right now, there's your area of risk, and here's your area of opportunity. Eyeballing that, looks like maybe a 3-to-1 to the up. And that'd be good because that would mean yields down, stock market up, risk on, game on, time to get going. Yo! Yeah, so that would be good news. Is it going to happen? Well, hell's bells. I don't know that. But it looks like it wants to try. Now, we have gold, we have silver, we have WTI and Brent and a bunch of other commodities. Do we have soybean meal futures prices? No. But we have gold and oil. And, silver. Is that good enough? Yeah, that's good enough. So let's take a look. What do we have here on gold? Consolidation. Now, you might be fundamentally bullish, which is great, but it's saying you might be a bit early. You might want it to go up, and that's perfectly fine. It's just not really doing a pattern which suggests that it's going to happen. We got to the top of the triangle, and it held. So right now, probably going to go to the bottom of the triangle until we get into the apex. Then it'll probably do a potential breakout, and then it'll pull back. And if it kicks off the moving average or the lower bound, then it'll go from a triangle to a rising channel, and then you'll be hot to go HOTTOGO. Stock market, S&P 500, yeah. Okay, what's it going to do? Well, we're going to look at patterns. Remember, I'm only looking at trend patterns and reversal patterns. So far, we haven't seen a reversal pattern. So when we see what's going on in the stock market right now, we have a triangle breakout, so consolidation on the hourly, but it looks like it's trying to break to the upside. So if that works, remember, this isn't a signal. It's saying if it makes that move to the upside, then it's a break of the existing channel, and then you might want to buy a dip, and then that pattern would change from a triangle to maybe a wedge or a channel to the upside. Or maybe it fails and collapses. Well, that could happen too. This is just showing you the triangle itself, the pattern of the triangle of lower highs and higher lows may be under threat, and it might be breaking to the upside, and that might turn into bullish. But that's only an hourly chart. What about the daily chart? It's already bullish. And so you might be riding the moving average or riding the bottom of the channel. But remember that wedge hadn't formed yet. So for example, this pattern hadn't been. Oops, let me delete the old drawing. Okay, this pattern hadn't formed until we did this. So then, after when we got this bullish engulfing candle, then you have to understand. Then you go back and say, well, there's a high and there's a high and there's the low and there's the low. So that's why we start projecting this way. And so to know how to trade this is the next thing for you. And so your option is let it pull back off the moving average, long and gone. But you wouldn't sell a rising wedge. What's wrong with you? Or you let it pull back even more and you buy it off there. Cool. And that's that. Would you, right? Yeah, that's it. Pretty simple. And what about the 4 hour? It concurs. Basically the same thing. So maybe breaking out here, which would be a kickoff. Let me zoom into this just so I can make that point. Kicking off the moving average. So wait. The 15-minute is really suggesting support at the 4 hour moving average, which puts us into a long-term trend to 66 and beyond. All right, this is Fast and Furious, bro. So now we're going to go to viewer's choice. Give me one asset. Give me one asset that you want me to cover. It could be a currency pair. It could be a commodity. It could be a crypto. Do you want to do Ethereum since that's on the move? Do you want to do something fundamental? Okay, viewer's choice. I'll give you 1 minute. I'll give you 1 minute. Now I'll give you 10 seconds. 10, 9, 8, 7, 6. Well, the problem is I don't know how slow. Sometimes the delay on YouTube is a contributing factor. Gold. Did we just do gold? Or did I miss it? Did I skip gold? Oil. Did I skip gold or did I just do it 3 minutes ago? Not sure. Oil. Anybody else? Beast. Yeah, Beast was interesting. I did that earlier this morning. Anybody else? Come on now. All right. Well, let's do this. Let me move in live screen. All right, here we are. Let it load. Let's start with we'll do the beast. We'll start with the Forex scorecard. And let me load this up and put on our beast. Great British Pound, Japanese Yen. So pound CAD has a 9, pound dollar has a 7, pound Kiwi has a 4, pound Aussie has a 3, but you guys want to do pound yen. Maybe you're habitual. Why do you trade it? I like it. I like pound yen. Okay, well, there's a heck of a lot better things to be looking at, but whatever, bro. You guys do you. It is viewer's choice. You're giving up a whole bunch of better opportunities, but by all means, let's take a look at it. Fundamentally, we're neutral on this sucker. Seasonally, it's not good for trading long. Okay, so we have the score here and the score here. 56.71% of institutions are short pound, and 65% are long yen. So we're actually favoring the down here, although we know soon, whether it's today or in 5 weeks, we're likely to turn from bearish to bullish, but we don't see that yet. 60% or 59% of retail is short. So you add it all up, this is not something that you should be watching or very interested in. We can do a deeper analysis into the statistical analysis, not technical, but statistical. And it's slightly to the upside, although fundamentals are sort of bearish to down for now. But if you look forward, and that's the cool thing about TRADARS, you can look forward into the future. So you're like, okay, it's fundamentally not great now, but we expect the tide to turn. Either that process of turning from bearish to bullish has begun or will begin soon. So then you switch over and say, well, fundamentals take a while to change because most of the fundamentals only update, once a month, or price updates every second, right? So you say, okay, well, it might be bearish now, but you believe it'll be bullish in the future. And of course, we have 3 seasonality tools to help you figure that out. So if you're like, I get that. So right now we're bearish to neutral, but technically you want to be neutral to bullish. Fine. Then you can see we did recover. We are testing the long-term moving average. And when you look at the slope of the mean, it is a positive integer. So maybe here. But now with the pattern, though, that's not a good pattern for trading. It's just showing you statistically. And let me do it this way. And I have to make this thicker just to make my point. I'll try to match this up a little bit, but this is what the trend looks like. Something like that. So, okay. And then this is the standard deviation. So worst case scenario, best case scenario. If we maintain this, angle of attack. which we're not likely, because if we kick off the moving average and continue up for the next 3 months, then if anything, it's likely to steepen. So if you were by a dip, at least in 1 week, we should be testing, on our way to 201. Do we have the guts to get through 200? That we don't know. This is just a linear projection with a standard deviation. Well, okay, so we're like, fundamentally, we're not cool with this pair at all. There's much better trades to be looking at now based on macroeconomics. But we're thinking maybe this week, next month, we want to be long pound yen. So we don't have the fundamentals. We're neutral. Technicals might be forming, but we're stuck under the resistance of a psychological level. Are there any patterns on pound yen that would support the idea that fundamentally we're not there yet, but technically we might be setting up for that seasonal move by the end of next month? And so we look at that, and on the daily, there is a rising wedge. So that shows strength, but that strength